All right, we are live. We're getting started. We're testing out camera two. Hey, good to see you all. Good to see you, everyone. I'm Mitch Goldberg. Welcome to my live stream. We're talking about the stock market. We're talking about things related to money, attitudes, attitude toward money, psychology. I don't mean attitude like, oh, yeah, you like money, you need money to live your life. I get it. But we talk about in depth, like money, psychology, behavioral finance, a lot of things uh, a lot of things about money are are driven by fear and greed, and you know we all have good points and bad points. We'll have strengths and weaknesses. It's just that I think money is one of those ways in which you see these strengths and weaknesses come out. Like I've met people who are good with money, but they're incredibly cheap. Like cheap to the point where it's beyond disgusting, like cheap to the point where it's like beyond inconsiderate to their fellow human being. So they're good with money, but they're cheap. But it's not the money; it's just what about them psychologically gives them such a scarcity mentality. Like what did that? And then I see people who are big spenders; they can't hold on to a nickel. What about them? That's like the complete opposite end of the spectrum. Irresponsible with money. What was it about someone like that and their upbringing or their psychology, their mental state? What about it? What about them? Sometimes people's mental health impacts how they are with money. So there's a lot more to money than just the stock market and just a checking account and a savings account. And there's money is such a psychological behavioral finance topic. It's all about behavioral finance. Really, I actually think like everything in life is behavioral finance. Everything from relationships to how you treat yourself. So we talk about these things. By the way, while you're watching this, if you wouldn't mind, give us a thumbs up, give me a like, give me a wow, give me an applause, whatever reaction that is available to you, depending on which social media platform you're watching from. And if you have any questions, uh, money related, finance related, mortgage, whatever, you name it, hit me up in the comments. I love hearing from you. It's the best part about doing this. If you just want to say hi, hit me up in the comments, say hi, and let me know who's out there. And when you also give us a like and some kind of reaction. By the way, Melanie is out there. Thank you so much, Melanie. It's nice to see you. I saw you just had a lot of lovely things to celebrate in your life. So congratulations. But when you give us a thumbs up, I get to see who's out there, who's watching, and I really appreciate it. Plus, when you like it, the rest of your social media community will see it, and then it helps to spread the word about the work that I'm doing here. This is all sponsored by me. I don't take money from providers of financial products to get them a plug. I don't do any of that. This is strictly educational. I share with you uh, lessons learned from over 30 years of being a financial advisor, over almost 33 years now. So I share it with you, and I hope you'll take full advantage and pick my brain and ask me the questions specifically that you have. But if you don't ask me questions, that's okay, because I kind of know what people want to talk about. I know what's on people's mind. I know what's going with the market and the latest and greatest in personal finance. So we're going to go through all of these things. So Generac takes how do I say Generac, the generator company? Uh, it looks like Generac ran out of power, which is kind of strange because you just had the whole jump in the stock when Hurricane Ian hit Florida about 3 weeks ago. And yet the stock is right at its year low and it's plunged. It's gone from like 600 to 100. So that'll be the stock of the day. But we're going to talk about some stocks that traded after market as well. We have Andrew out there. Um, Wino Video. Whoa. You should be seeing me on video. I mean, I'm seeing myself. Why not on video? Oh no, that can't be. Let me check settings here. Um, you guys really can't see me. that is going to really piss me off. That's gonna be really upsetting if you guys can't see me. I'll just check it on LinkedIn. I'm just going to my own LinkedIn account right now, which takes a second. Do you guys see me at all? No. Yes. No. I don't know. GZ. That really is a bummer. I don't know why you're not seeing video. All my gear is on. It would be really annoying if I have to check every little piece of gear every single time I do this. But let me just check the camera. The cameras are all on. The gear is on. I don't know. I don't know what the deal is. Can you guys see me on Facebook? Oh, I can see you on video. Okay. Ryan said he couldn't see me. Okay. Andrew said he can see me on Facebook. Ryan said I can't see you either. And now Robert says I can see you on video from LinkedIn. I don't know. You know what? This is just like I have to say this isn't like TV. It's over the web broadcasting. But hopefully you guys could see me now, and I I know I could hear it. Look, I'm just going to keep going. Hopefully, the voice will be good enough. The voice. I'm sorry about that, guys. I don't know what to tell you, but I do appreciate so many people out there watching. Like, I usually don't know how many people are watching until people start liking and commenting. So, um, I'm on LinkedIn Mobile. And Robert, you say you can see me on video. All right. So I can't spend too much more time on this. I see you on Facebook. Keep rolling, bud. Okay, Andrew. Thank you very much. All right. So let's just jump into a couple of things over here. Let's take a look at the bond market, and we're going to get rid of the social media icons. Those are a little distracting right now. We'll get rid of those. All right. There's something that's going on. The market backed off a little bit today, the stock market. Let's think of it that way. So the stock market backs off a little bit. Why? We had a couple of good days. Overall, I think the stock market held up pretty well today, and I'm not in any way, shape, or form disappointed with how the stock market did today because we had a couple of nice up days, Monday and Tuesday, so we backed off a little bit today. But I want to give you the reason first, and that's what you're seeing here. You see all the green on the screen. I know some of you can't see it, but interest rates went up a little bit. They ticked up a little bit, but interest rates have been ticking up consistently. It's little by little they've been going up. At first they were going up much quicker, and then they kind of stopped, and then they started and they stopped. Now they're going up a little bit. But if you notice, even the 3-month T-bill is now at 4%. So if you're unsure of what to do with your money, you actually have the option now of putting some of that money into a short-term T-bill and say, you know what, for 90 days, I'll get 4% of my money annualized. It's not a bad trick, and I'll do that. That's not a bad place to wait. Or what I think you could do is if you have bond funds, either mutual funds or exchange traded funds, you can sell a bond fund, take the tax loss, and then put that money into a short-term treasury, get over 4%, okay, for 90 days. And you could buy back that bond or that bond fund or not. But what I'm talking about doing is tax loss harvesting. You can harvest your tax losses now because we know intellectually, we know the markets come back. It always has. And when the market comes back, you start to do some buying and some selling, and then you realize some capital gains. Then you've got to pay the taxes on that. And then the market goes down again. You're going to be like, I just got finished paying taxes on the gains, and now my account is down anyway. I wish I had some way to reduce my taxes. That's why in a market like this, you have an opportunity to take advantage of tax loss harvesting. And it's something that if you don't know about, we can talk about that. By the way, I'm not a tax advisor. I'm not a CPA. Only a tax advisor is qualified to give tax advice. And did you know that you can't invest directly into an index fund, but you could invest in a fund that tracks or mimics an index? Okay, just got to get that in there. But if you notice in my screen here, even the 30 years over 4%, the 10 years at 4.1%, the 2 years at 4.5. The highest you're getting now is 6 months. I'm sorry, the highest you're getting is 1 year is 4.6%. If we're at 4.6% on the 1 year, it's not that big of a jump to say we could actually get to 5% short term treasuries. At 5%, that is real competition to stocks. So we went from like a Tina market, there is no alternative, to a Tara market. There are reasonable alternatives. It's been like Tina has me locked up in stocks. I need to earn interest. Bonds are paying no interest or so really low interest. So I'm going to buy stocks for the dividends. I'm going to hopefully get the growth with them. So people go into stocks because there's no other game in town. I don't want to go into, a lot of people said, I don't want to go into crypto because it's too speculative. And I'm glad, if you thought that way, I'm glad you did. Uh, and they neglected bonds. They were right to neglect bonds because bonds have gone down so much in value, but your stocks have gone down in value as well. But now that stocks are down, there are other places to put your money. You don't want to put your money into a short-term treasury paying, just over 0%. But if you could get 4.5% now, you might be thinking, like, what, dividend stocks for 3%, 3.5%. Why wouldn't I buy a treasury for 4.5%, a T-bill? And T-bills are safe. I can say that to you, that T-bills are the safest investment there is. They're guaranteed by the full faith and credit of the U.S. government against default. They pay interest, they pay principal. It's the safest thing we have. That's what we call the 90-day T-bill, the risk-free rate. And it's over 4% now, which is a pretty good short-term place to park your money. You're not getting that in a money market. You're not getting that in a savings account. And you're not getting that in CDs. So we went from Tina to Tara, from there is no alternative to there are reasonable alternatives. And that's really the big thing that's pushing the stock market down in terms of a very big broad view, 40,000 foot view looking down. All right. So let's take a look at how the stock market did today, since that's where we usually start. So stocks are down. So the Dow was off 100 points. All right, you got me. It was off 99.99 points. We'll call it down 100. No big deal, 0.33%. NASDAQ was off a little, off almost 1%, but it had a big rally. S&P was off a little, off about 0.2%. No big deal. Gold continues to stay in the 1600s, not really doing anything, kind of maybe telling you inflation is not such a big problem. We're getting over it. Oil had a big up day. The 10-year yield was up squarely into the fours. When the 10-year kept going 4.39%, 4%, 3.9%, stocks kind of waffled around and people were a little bit more confident. But with the 10-year yield at 4.14%, people are starting to think that maybe we'll see 5% on a 10-year treasury. And if you get 5% on a 10-year treasury, for a lot of you, you're going to think that's pretty good. And if you buy that in an IRA, that means you're getting in that account, tax deferred, 5%. That's like, for some of you, that's like 8 or 9% on a tax equivalent yield. Competition to stocks. There are reasonable alternatives. The VIX is staying around 30, nothing crazy there, not really changing a whole heck of a lot. Let's take a look real quick. Tesla earnings come out after the close. Stock is down about 4%, down about $9 a share. The year low is 204. It's pretty darn close to that level. It's like a $21 stock going to 20 cents and $20.40. So we are on our way lower on Tesla. Revenues, volumes were off. We're not as good as expected. Earnings came in pretty good, so they are definitely getting a good profit margin for their product. But that bears watching. What we need to see in automobiles is unit growth, volume. The problem with that is if we start to become all about volume growth, it has a negative impact on profits. So it's, making money in auto stocks typically in auto, it does not last long. Okay. So what else? IBM up $6 in the aftermarket. Good numbers. I'm very happy to report back to you that finally we got a nice number out of IBM. Some consider it a cheap stock, nice dividend. The dividend on IBM is over 5%, and the stock's only down 8% on the year. Obviously, after Tomorrow we'll say it's only down 7% or 6% in the year. So it's IBM had a good number. Well, that explores. It's worth for me to do some research on this tomorrow to see if that's something that maybe I want to take a shot at people's accounts. It's had so many head fakes and it's been dead money for so freaking long, for like the last 20 years. It's really hard for me to believe anything good could come out of IBM. On the other hand, if the stock is so oversold and nobody really owns it anymore, uh, and we get new buyers coming into it, that could be a boon for the company. That could lift the stock a lot, and that could be a sustainable it could be a sustainable rally. So I'm going to have to take a look at that tomorrow. And let's see, the stock of the day is Generac. This stock was just popping up at higher prices when Hurricane Ian came around. But the year high is 524. The low is 109. It looks like it's right off the low in aftermarket trading. It's down almost $38 a share, down. It lost a quarter of its value today alone. I mean, that's such a substantial drop for any company. But I think a lot of people believe this company because it's a play on energy independence. It's a play on your own energy independence by getting off the grid if something happens, if there's a blackout. But lo and behold, what got Generac is a weak housing market. Okay, if people aren't going into new houses and home builders aren't building as many new houses, that reduces demand for product. And one of their biggest, I think their biggest customer also recently went bankrupt, which doesn't help. So very tough for Generac, and that is our stock of the day. Unfortunately, it's not a happy story, but down 25% on a really bad earnings report and bad forecast is a stock that says makes you say ouch. And it's the kind of thing when, in my opinion, I don't think when that happens, stocks like that are worthwhile waiting for. I'm not saying Generac in particular, but I'm just saying, generally speaking, when a stock hits a year low on a really big earnings and revenue miss, it's not something I want to be in. I'd rather take the loss and move on, whether if it's Generac or another stock. Not a specific thing for Generac, just my own trading philosophy that when a stock plunges like that, I'm not going to be in it the next day. Your first sell is your best sell. Remember that. And that is pretty much all I have. I see Jay is out there. Jerry, thank you. Andrew, Melanie, thanks, guys. I really appreciate you guys watching. So I'm going to get going now. But overall, let me just do a quick overall summary for the day. Today was a pretty good day. Interest rates ticked higher after a substantial 2-day rally in the market. Interest rates ticked higher today. You would expect, like the last couple of months, that the entire rally of the last couple of days would have been repealed. We would have been down 800 or 700 points today, maybe more in the Dow. But we're only down 99.99 points. Market's starting to hold up a little better on bad news, on the things that typically knock it down. So I'm putting the tea leaves together and looking at my little board here. Things aren't looking as bad, and that's why I'm glad I said Monday. I think that was a rally you could trust, and I think it says good things. I think it's good things. Okay, now I'm done. Have a great day, guys. I'll see you tomorrow.